say make money, money, make money, money, money. Make money, money, make money, money, money.
I'm just gonna
Money makes the world go round. I'm the talk around town. Remy gave me the sound.
All right, we're gonna fucking do this. So, by the way,
keep the time. But did you notice my name is not Georgie Boy? It's George the Stock Guru. I just wanted to point that out in case you missed
okay,
that.
whatever. To what extent do I have to participate in your delusion? I mean, did you change your pronouns too?
Reality is all what you make of it, my friend.
So, myself.
All...
Did you guys watch the Rogan podcast, by the way, of Trump? Trumpolini? The
Rogan
highlight.
Orange Edrigan, whatever his name is, Donnie. I actually was kind of amazed. So I was basically I'm a little bit left leaning, as you know, perhaps. And my buddy was just like, "You haven't watched any of them, have you?" Yeah. So I watched it, and you know what? I'll give him credit. He was like, seemed less insane, and he's not. I think he's getting a lot of coaching, right? I mean, he's in the McDonald's drive-through. He's acting normal. Like he must be horrified about going to jail, and so he's like actually taking some coaching, I think. And
you think so? You think he listens to people?
I think he's now having to, right? I mean, he's totally changed his personality, I think. I mean, Rogan's also like a total ball cupper. Like, first question is like, isn't that funny how the media turned on you? I'm like, oh, this is a fucking hard-hitting interview, Joe. Way to go. You're really fucking giving us something new here.
Well, Joe Rogan's like pretty right-leaning, right? Like,
yeah, but he also has been pretty complimentary about Kamala. I mean, to his credit, he's a conspiracy theorist, and I think that really plays into the whole spiel, like, oh, the media's against Trump, and talking about how like Oprah used to be for Trump in 2016 or whatever, and 9 years ago, like Joy Reid and all the guys in the View were were slobbing his knob on TV, and not literally, metaphorically, and you see it's going on and on about and he's talking about, oh, you were assassinated twice, and I mean, just like God, it felt like very, very friendly, but I do also think that he has allowed some criticism on his show of Trump. He's allowed some very unfriendly Trump guests, and he's said some positive things about Kamala. He's not said that she whored her way to the top or anything weird like that, like the right-wing sphere seems to be focused on. I mean, it's disgusting and sexist in my opinion. That's for the ladies listening. I'm also on the market soon, everybody. So,
I will say my favorite part of this year's campaign so far has been when Barack Obama was campaigning for Kamala in Detroit, and he busted out the Eminem lyrics after Eminem gave him the intro.
Was it "Lose Yourself" or something? Did he like?
Yeah,
he
did the
one
first
shot.
he did the first like 16 bars or whatever of "Lose Yourself." It was like pretty remarkable that he actually knew all the lyrics. But he's just like, I mean, he's just like the coolest president we've had in like 50 years by far.
Well, actually, I think, well, yeah, that's true. But Brian, but before being cool president was being cool, Bill Clinton busted up the sax on Arsenio Hall, right? So
Bill Clinton was cool. Bill Clinton, I thought, was a pretty cool president. That we should do like a cool president ranking. Like, we've been out of the race for.
I'll bring my ranking of the let's do the last like 40 years, right? Actually, we didn't go to Theodore Roosevelt, right? Actually, you know what? That's not limited because you got to get Theo.
I think you start with JFK. JFK was like
he invented cool.
Yeah,
way before my time though. I can't really comment.
He was a dynasty cool.
But what about like the 6'9", fake tooth, red haired George Washington? Like,
George Washington had red hair.
Yeah,
he was 6'9".
His bush was red. He was tall.
I think Reagan had the actor.
The cherry tree. They weren't talking about an actual tree. It was a metaphor. The cherry tree. It was George Washington. Cannot tell a lie. I didn't cut it down, Dad. That was a masturbation metaphor. The cherry tree being cut down. That's what that was. They didn't tell you that in school, right?
I thought it was Abe Lincoln who couldn't tell a lie.
They're all the same.
Honest Abe.
All the old white guys. I don't remember.
I think we should rank cool CEOs, given that we're a stock podcast, not a political podcast.
Is Matthew Prince cool?
What about George the accountant?
I think there's mixed opinions on
Definitely.
that
one. Well, maybe. I can't think of a cool CEO.
Jensen's definitely moved up a few notches.
Jensen, yeah.
signing glass with Sharpies.
Cool. That's just obvious. Yeah, he's the rock star. He's the Obama of CEOs, right? a Texan.
And where do you put Zuck with his new changes?
He's moved up.
He's way up there. He's probably whoever his stylist is, and publicist. I want that. I mean, like he's got the necklace and he's got the fro, old school fro. Like
We'll give you a perm, Gordo. It'll be perfect.
He should get a mistress at this point. That would make him.
He's like an MMA fighter and stuff now.
Yeah, I know.
He can't get a mistress. He's got a statue. He's trying to build a statue of his wife in their backyard. How are you gonna have a mistress?
At all. A couple years ago, he was slaughtering sheep in a kosher style in his backyard, cutting their throats, and then now he's building a statue of his wife. He's like the J.D. Vance of tech, basically.
Maybe that's the price for having a mistress, though.
He's got to kill him.
Jump into it. I do have my leash is short tonight, so Gordo, should we have the AI do your disclaimer?
Yeah, sure. Here it goes. Do not trade on this information. It may not be suitable to your circumstances. This is not advice. There you go. That was pretty good. So, yeah,
thank you, AI.
Maybe, who wants to do the? I guess I'll do it. Why are we doing this? What is this episode? We are deviating from our normal format, right? This is the Where Are They Now episode. We've done, 10 episodes now of mostly tech stocks, with the exception of Lulu, basically. But yeah, we thought it was a good time to kind of go back and hold ourselves accountable, because we're accountable guys, and see what we've learned, if anything. And that's the goal. Have you guys want to add anything to that? No?
I've learned that I'm an amazing stock picker. That's why I'm George.
All I know is I got the title. I got the belt. And it's all because of the first episode. So, at least by how I'm measuring it. I got the...
as we get into it, I do think one thing is important to keep in mind is, I may not have been right on all these, but it's just a matter of time.
Yeah, timing is everything.
Until you're wrong on all of them, or until...
Eventually, broken clock strikes the right time twice a day.
I'm only in for I'm not in for being right.
But no, in all seriousness, I do think some of these, it's we're picking an artificial time. They've all been out there for different amounts of time. I think there are certain aspects of not just looking at the absolute performance today, but it's really about what new information's come in. How does that change your perspective? Have you changed your view? Do you hold the course? So I think that's really kind of the interesting part of the discussion.
I was just going to say that, there's one, obviously massive mover here that, was really driven, I think, a lot of the delta and average. And so, this happens over the course of, portfolio management. You'll have one kind of stock, especially I think we're equal weighting all of these, kind of drive everybody's average. And so, as you can see, when we take it out, really, I am the best stock picker of the three.
Yeah,
obvious.
that's how we do it on the buy side, right? We just take out the loser, and that's look, except for the one that blew us up, I crushed it. Pay me my bonus, bitches.
And then somebody cut the analysis in a true banker style to exclude two of them.
I was just trying to find some way to. It's
That's the one I like.
League tables, right? League tables, right? Well, dude, Lulu's a tech name. It's not a tech name, rather. So it's technology, as we discussed. It's very, fragrant and stretchy technology. But yeah, I guess to kind of recap for people listening at home, we have a summary chart that our intern pulled together, and he was up all night working on it. And basically, what we did was we looked at, and you can see this on the YouTube, if I published them this time. But basically, all we did was we said, okay, what's the change? What's the change versus the Nasdaq? By the way, Instincts were basically more like hedge fund guys that are long short. That was a pretty aggressive and grading ourselves pretty hard, right? At the end of the day, relative performance is kind of a mutual fund mindset. But hey, we're gonna grade ourselves. We're not gonna let maybe people pay us for beta, right? We're gonna say that we have to, we have to beat the Nasdaq whether we're long or short. But it's pretty sloppy. There's a joke in there somewhere, but basically we're saying, equal weighting, like, the portfolios I've calculated here are basically if we bought every stock and equal weighted the return, regardless of how long we've held them, like this is what you get. And if somebody had a tepid opinion, it looks like I was the most tepid. You might make an argument that I think you had a long-term buy on LULU, so maybe you could even penalize yourself less there, Georgie. But if I recall right, but we'll get to that. Point is, I was the best, and it's almost all driven by Super Micro being down 55%. And by the way, I would argue that I actually didn't short it myself until it was like at 1,200, and I made that in 1 month on some puts. Like really, the return from the top is way better. I mean, it was a total shit show. We'll get into the details of that, but if you back that out, I mean, it's kind of funny. Like we weren't that far apart. It's not super confidence inspiring that a 55% return, I end up with a 4% average. Like that's not. It doesn't seem like the most replicable. Getting 155% or on the short side a quarter. Like I don't know if I can do that.
Well,
again.
It's 4% outperformance of the market, right? So the market generally was up. When I look at Nasdaq as our benchmark here, all those numbers are positive. So you're outperforming the Nasdaq by 4%. So don't sell yourself short.
That's right. Yeah, I guess we should average that out. It looks like something like 10% or something on average. Maybe I can go look at that. But so that's fair. So maybe we got like 15 points. So yeah, we're doing God's work here. We're helping you guys even though it's not advice. If you're using it in your process. Anyway, we're inspiring. That's the point.
I think too, like just it's very healthy as an investor to look back on your, understand your portfolio, understand like when you made good calls, like why were they good, and when you made bad calls, like what are the mistakes, and you can start to learn from you see patterns sometimes, and I've done that in my own investing in terms of like what are mistakes that I make, and when I do things well, can I replicate that? What was it that led to that? So I think it's always extremely healthy to go through an exercise like this and look back and say, okay, well, what did we learn from the stock so far? And it hasn't been, like these are all short term. They haven't really had a chance to run, but I think it is healthy to do this. We should do this every like 10 stocks that we put out there and go through the portfolio. I think is a great exercise.
Like if I get a bad lap dance, I don't get another lap dance from that person. You know what I mean? Same thing, right?
Well, you got to coach. You got to coach.
Okay, what did I do wrong this time? Okay, she
should be paying you for that.
She looked tired. She was too pretty. Okay, going for the ugly one. Go for a chubby. You figure it out.
Yeah, those girls got to work.
That's right. Well, but I got needs. But it's not a charity. So anyway, let's go back to the topic at hand, so to speak.
Part of the tough thing here, though, like as it compares to like your actual portfolio management, is like when we think about these names, we're forcing ourselves to either buy them or short them, which I think, like obviously for real portfolio management, in real portfolio management cases, like for your own portfolio, you wouldn't necessarily have to do that. Like you can sit on the sidelines in almost every single equity instance, and here we're forcing ourselves off the sidelines, which I think is
I guess it's just a mutual fund way to think though. Like if you're like a market neutral fund, like nobody's paying you to fucking like to hold anything, right? Like and hug the benchmark and all that. And it's just very I'm glad we're holding ourselves to a higher standard. I'll take the compliment. For sure.
And I will say, like looking at this list, like even though we've had buy or sells on these as an example, like we have a list of 10. I've taken positions on 2 of these names out of the 10. So realistically, I had enough conviction on 2 to dive in.
And the last thing that I would say before we jump into the analysis is also like for a lot of equity names, right? Like if you start to get something wrong, like on SMCI, right? If we saw that like there was some accounting malfeasance, we would get out of the name before continuing to suffer the blows of whatever the analyst says, whatever kind of the news cycle says. So it's one of those things where we're not only forced to make a decision, we also have to stay in the decision until we do the retrospective analysis, which I think
it's not actively managed, right, from day to day. You would make decisions in between.
Right. Yeah,
and you would probably weight differently as well. You wouldn't be all or equal in your mind.
Well, and sometimes too, like you're gonna get like in my case, like if I had gone short Super Micro 800 and went to 1200, my PMs, they're yanking me. There is people who are yanking me. They're not letting me hold that, right? Like I'm out. I'm not making that 55. Like you can't be wrong for very long, in a hedge fund or on the buy side. before they make you close it out, or you get fired. It only takes a bad quarter or two to get fired at Millennium. So, as we've seen, you can't. So anyway, we've been pontificating too long, but so let's just move on. But as you can, this is the summary. Let's just go right to Supermicro. So long story short, next page. So again, we already said that the Supermicro is down, 36%. The Nasdaq is up 19, so it's an outperformance of about 55%. I was a genius and had to sell. These two dipshits had to buy. It's kind of interesting. Like the revenue forecasts continue to climb. They're implying about 100% growth this year. Margins are complete dog shit. Speaking exactly to one of the issues that I had talked about in the call or the podcast. Also, some reports and accusations that they're shipping servers into Russia. There's a huge class action. Still a total piece of shit. I personally think that there's more downside here, that people are kind of like shrugging this shit off, and it's just a matter of time before Dell gets in there. I will agree that AI is on fire, but I would still be negative on this. It's hard, much harder at basically 470 is there's a 10-to-1 split too. And I got added to the index we discussed in the past. So like there's kind of like a bid that wasn't there between splitting it and putting it in an index. So there's it's kind of like it's kind of rebased, but I'd be long Dell and short this. Like AI is going to be, very strong, I think, over the long run, but I think these guys can still surprise you with, with herpetic lesions of, the metaphorical sort, like either they ship to a bad country or they get caught for fraud or this big judgment for shareholders or whatever. It's just a problem child. Like own something else. Don't own this one is still my opinion. I'd love to hear you guys' quick takeaway on that.
I will say that to George and my credit, like this for you was really more of a revenge short than anything else. Maybe to your credit, you were right. So that ended up, I think penciling pretty well for you. But it was one of those things that's like almost, you sort of never. I mean, unless you really are dug into the financials or you have some sort of proprietary view on like the supply chain or something, it's really hard to tell when a company is like going to be held accountable for some like malfeasance. So yeah, I mean, I think like my view is actually, I think it's more attractive. It continues to be more attractive. Like the lower it goes, I think like AI will continue to be a tailwind. I'm not saying that they're not doing any of the things that they've been accused of, but I do think that like the upside here, there are very few folks that can put together high performance AI type servers in the same scale that Supermicro can. So I continue to be, long the stock, but I agree with you that there are other better ways to play this opportunity than jumping into this one.
All right, we should do that. Yeah, I think we should basically pick a side again. Where are you on this one now? If you have, we should all like pick an opinion. Would you, force an opinion on this?
Maybe I'll jump in and then we can all echo if anything's changed. I mean, I completely agree with Bruce. Like my kind of role is like I won't mess with something where it feels like the downside. I don't know whether it's an accounting issue or like here. Like the thing that scares me is like less the accounting and more like where have they been shipping to and what does the U.S. government do about that. So from that standpoint, like I'd like to get out of those kind of stocks, but if I had to be forced into a side, like these guys have the margins aside, the margins kind of suck, but like the volume is just tremendous, and so I would still, if you had to force me to a side, I would say buy from here because I do think if that ever gets resolved, like these guys will go up, but who knows what that penalty will be and if they've done something wrong. So I would honestly just sit this one out on the sideline and watch it play out from there.
Well, I mean, for me as a PM and a hedge fund, like you got to be short something, and for me, it's like I would be. I mean, yeah, you don't want to be short without a catalyst. You raise a good point. Like nakedly short something without a catalyst or on valuation is very not. And I've done that. I've been the moth to that flame enough times and shot myself in the pecker enough times doing that. But if you have a portfolio and you just need some stuff, like forever, IBM was like the source of funds, right? Like you had to be. People were just short IBM forever, and that worked. No catalyst. So anyway. I think we got our conclusion. Moving on. The flare up the Cloudflare. So to summarize, I want to hand the mic to somebody else. Like who's assigned this one? I think it was you, Bruce, or George.
I think it was me. Yeah. So, Cloudflare, I think congratulations to all of us. I think we were all right here. Down 3% relative to the Nasdaq, which is up 16%. I'd say, look, the crux of the matter, I think, with Cloudflare is that their performance has been relatively flat, I would say, on an overall basis, just because the expectations for the stock are so high. Like the company, even though they're down 3%, is still trading at 15 times 2025 revenue. And so that's at the top end of the range of the kind of fast-growing cybersecurity companies. And so I think it's one of those things where they're sort of priced to perfection, and unless they outperform massively on these, quarterly prints, they're not going to move much higher. I would say long term, I'm a bull on the stock, but they need to, continue to execute. And I think in this environment, maybe they'll be able to, like, as money becomes cheaper, they'll be able to, drive incremental sales. They'll be able to hire more aggressively. They're obviously like one of the largest cybersecurity platforms in the world. So I think there's a lot of opportunity for the company to continue to build like a pretty sizable, base. But it's one of those things, I think, where, again, I would probably, I'm not super convicted on the buy, I would say, and like there is more maybe risk to the downside in the near term. But I think like if you're gonna put money into a company and not look at it for the next couple of years, Cloudflare is as good as any.
Why don't you go ahead and
Yeah, I
comment
think for
there,
me,
Jordan?
I would stay on the under. We call, actually, I'm noting on our slide here, we call this underperformance of 19%. It's actually outperformance of 19% for all of us, and this is the only name that we all agreed on, actually. When you go back through the 10, I would stay as.
Yeah. Yeah.
I was gonna say I'll stay a sell. I mean, I think the valuation is high enough here, and that's kind of what kept me on the sideline. It's an excellent company. I think it'll do fine, but it's just baked into the valuation. So I'm not sure it will outperform the Nasdaq. I think it'll do just fine. I'm not calling for it to fall here, but if I'm saying, hey, I want to bet on things that I think have outperformance potential, I would put this one as I'd continue to sit on the sidelines.
I'm going to go out on a limb and be different. I'm going to say this is a high beta name. And, until the election comes off, it's kind of been sideways for a while. AI, they had some AI, based storage stuff. Storage is ramping for them. Some of their smaller competitors are struggling. And so I think there's nothing's fundamentally different. I mean, it's down 3%, right? Things haven't changed that much, but we have moved. I guess it's that was in March when we did this, and here we are in October. So it's numbers for next year haven't changed, but they're 9 months. Or sorry, see, it's 10 months, 7 months later, right? So I mean, just from a discounting perspective, the stock should be worth more if the estimates haven't really changed. But I'm just gonna say, maybe there's been enough time, but I haven't done a ton of work on it. Just sort of like maybe I'm just being a contrarian, but I just feel like okay, maybe this is the time to dust this thing off. Let's call it a weak buy, but it's almost kind of like, hey, almost like a just expensive stocks are going to rise more. I don't know. These high flying names. This stock used to be way more, right? It's down a ton relative versus the heady days. It may never get back to where it was. Like that was a different time, but I don't think the economy is showing any kind of real recovery. But this is something you're going to need in the world of AI. You're still going to need, and they have some offerings that are very tied to AI. But all right, I'm getting to move on. So let's move on. DigitalOcean. This is my baby. So
Cake by the ocean. Oh,
yeah, that's great.
did I nail that?
Yeah, cake by. Yeah, I don't know about that. Edit that out. So yeah, these guys, I would confuse them with like DocuSign, right? This is like ticker's closed. So but yeah, DigitalOcean. They actually did okay. Like I mean, I think they're up 7.5%. They've underperformed the Nasdaq, but they did have a nice little beat, and the stock was up 10%. And so I kind of feel like even though it's underperformance, it's kind of not so bad. And they did say that they're investing, in AI, and that's pressuring their free cash flow margin. I feel like that's kind of on the come. I think that some of like the easy money's been made here, even though it's underperformed. Like it's had a little pop. Like I don't know, jury's still out. I'm gonna say weak buy now for me. I mean, just a little of the easy money's been made, but I still think maybe these guys are, they're finally getting their shit together.
I'm still a sell, I think here. I think they'll continue to do well. I think they'll just lag the NASDAQ. Like, I think there's better places to make money, and I think that the way that they make money has certain headwinds that prevent them from being like real beneficiaries, like some of the other maybe SaaS-like names in the NASDAQ or the Mag 7 or some of the other guys who have like more ability to price. They have more exposure to tailwinds. Here, I think they're somewhat limited in their ability to, manufacture either growth on the top line or maybe even cash flow, as it looks like here. So I'm still a sell here. Not that I don't think on an absolute basis it will necessarily go down. I just don't think it will beat the NASDAQ.
What do you think there, Georgie?
Yeah, this one I mean, most of the folks that have catered to AI in the space have done well. These guys are just, they're the very low end of the market, and so, I question how much share they can really grab of that. So I'm kind of torn on this one. I could go either way, to be honest with you. I'm not as strong as a sell as I was, but I think I'll hold my line with Bruce. I just think long term, like their value proposition doesn't hold up to the bigger players.
It used to go both ways in college too, right? Anyway, sorry. Anyway, I know it's a phase.
That's our secret. That's our secret.
Yeah, it was a special weekend. So, I was looking for some valuation. I was trying to quickly get like a valuation on this thing. I wish I could see here enterprise value of like $5 million on like kind of $900 million in 25 sales. So it's like not like 6 times or something. Like it's not. Crazy, 5-6 times.
If you look at it on, I was noticing on Altimeter does their regression every week that you turn me on to, Gordo. Like I noticed them on that chart. Like they are kind of right on the line for the regression of like fair value. So if you look at like their growth rate and their EV to revs, like they're kind of right where they would be expected to be just on that basis.
Yeah, they're like a low double-digit grower, So I will say too, by the way, I mean these are definitely an SMB play, and SMB's been taking it in the shorts, right, in this economy, and so and SaaS budget's been taking it too. So I kind of feel like, again, this is one where if a little bit of recovery, if there is one, it could be good. A little uncertainty, a little budget at release,
I think the question is though, like what's the unlock for this company to like beat the NASDAQ in my mind?
It's the SMB, right?
They got to show return on investment on that AI spend, right? Like people actually have to come in and use it.
Yeah.
Right, but I think I guess like we would have already seen some like early signs of that, and I don't know if we have, and so that's why it's
on the
just like most of the companies that have like started to see strength in AI have already started to like break that out and really.
They actually did have that.
They
said they had like sort of like the the best net new AR in a while, new ARR in a while, driven by AI. But like it's kind of like newish. Like it's not like it's not like all their revenue or anything. Like it's still they're investing, like adding capacity for AI. Like but I think they've shown a tiny bit of progress. I think it's early days. It's not zero. I can think of companies that really have not shown any evidence of any AI. But anyway.
So the catalyst is watch for AI traction. If you saw AI traction, like I would be inclined to jump in.
I think any kind of macro.
But that's
like
the catalyst
SMB
I'd watch for.
Like SMB spending is a big thing too for these guys. Like they're a pure SMB, play. All right, moving on to the next one. By the way, don't worry too much here. The last few we're barely going to talk about because there's almost nothing to say because they haven't reported, so we have time. And Lulu's, yeah. So anyway, why don't you go ahead, Georgie? Let's talk about Lulu.
I'm wearing my tight pants right now, so let me stand up and show it to you, boy. No, just kidding.
Like a night in college. That's how you got me in college with those Burger Boys you were wearing.
Man,
those were just short.
Victory lap.
Yeah, well, so if you recall, as Gordo pointed out, I said I was a long-term bull here. I thought there was pain to come on the front end. So like I shouldn't be penalized for this one, but I am being penalized for it. And so I think the question is now, what do you think? So I actually put a lot of detail on the slide for those that can see it. I won't walk through it all. Like I will say the high end is,
thank God,
they have. I don't want your fingers to start like going into convulsions again here. Bruce is keeping us on time with the.
Are you done?
His wife is used to the finger convulsions. And maybe the mistress. Anyways.
There goes
Yeah,
the lady
this is a-
listeners. You
this is a
can't George,
family
you dirty
show.
bird.
This is a family show.
I think we've
can't
scared
keep
away
the
all
Panthers of the
families at
family.
this point in
Syndicated
time.
on this is going to be syndicated on a Disney network eventually.
This is
so
a family making show.
let's keep it 100.
That's the reboot version. All right. Anyways, I think for Lululemon, they've been Joe Rogan will let us on. Don't worry about it. I would say for Lululemon, they've continued to struggle domestically. So that's kind of been the story. So they've been kind of flat to down domestically. International continues to rip, and they're continuing to express confidence that they can reach, 50-50 mix of revenue. So today they're closer to 80-20 domestic, but China in particular is, ripping and rolling. So Q1, they grew 45% in China. Q2, that did come down, which gives me a little bit of angst seeing that come down. But, a lot of their discounting, margin pressures seem to alleviate. And you actually saw the stock start to rally. So this was down a lot more. It's down 11.8% since we talked about it. It was down almost 30% at one point. And then after they reported Q2, you've seen the stock come back. I think people have gotten more comfortable with it. It doesn't trade at a huge valuation. If you look at EV to EBITDA, it's 12.7 times for a leader in its space with a strong international growth. I do think domestic competition is going to continue to ramp up. Like I put a chart in here that Jeffrey's put together, which is shows just the number of stores of the different brands that we talked about. So Lulu's pretty flat. They're at 446 stores, but Alo Yoga is almost doubling their store count, 35 to 68. Viore, same thing, 29 to 57. So I was driving my daughter today. She was wearing some Alo pants. It made me kind of grimace a little bit thinking about that. She's 13. But I will say, like, ever since we did this episode, my eyes have been glued to those yoga pants, just, taking surveys. And I think Lulu still...
Whoa.
Hey, I'm going to the gym. I'm doing research. Doing research.
Simmer down. All right.
Hey, I'm dedicated to my craft here,
right.
boys. Dedicated to the craft.
Anyway,
for the team.
Your pants,
So
keeping the
listen,
family.
I will say, I will finish up, and I'll let you guys comment. I will finish like this one. Like I think if they can maintain their kind of flat in the U.S., like I think international growth will make this attractive. They're still growing kind of high single digits. I think there's execution to be had. They're not an expensive stock. They are a brand name in their space. Like so, I'm gonna stick with the buy here.
Yeah.
It's a tough one. It's not clear. I will admit that, but I'm gonna stay on the buy side if I have to.
I'm sticking with a conviction sell here, guys. This is Under Armour 2.0. I mean, it's just so obvious from like everything.
This is the brand name. Under Armour was the Pee-wee. That's the difference here.
From your unofficial yoga pants diligence trips, like this is. I mean, this is the thing is like Viore and Alo and a bunch of other brands are going to continue to cycle up, and this company is going to continue to cycle down. Like high end, like not extremely high end, but high end like athleisure, high end. Clothing in any category always goes through cycles, and there's brands that are going up while there's other brands that are going down. And so I think it's really hard to have a persistent brand that lasts for like 30, 40, 50 years like Nike's been able to do, or some of the very, very high end like fashion companies. And so this is a brand that's cycling down, and people are taking their dollars and they're spending it on other brands that are cycling up. So I don't see it. I think this continues to be like a strong sell. I don't think it's overvalued, but I think like they have negative revenue comps, and you're expecting like the international story to make it up.
Not across the board. They are still growing in the U.S. Yes, it's flat to down. The one thing that gives me comfort is. Do you remember the survey that I put out when we talked about this? And it was like the survey they do of like teens. Like this was one of the highest recognized brands, aspirational brands for teens. So for me, like My daughter has one pair of Ella pants, and you know how many pair of Lulu pants she has? She has like 5 or 6. So end of the day, like
From
it's
5 years
still
ago.
winning the hearts and minds. They might have been my wife's. I don't know.
This is a brand that used to be hot, and now it's on its decline. It's obvious from every
I'm gonna
number.
agree with Bruce. I'm gonna be negative. He convinced me. I like the chart better. It seems like it's rebased and it's kind of working better, and so that kind of tempts me. But I fucking hate these things. Like I think that it's like, yeah, it's not gonna be new anymore. This is your mom's yoga pants. Time for the new hotness. This ain't it. And even in China,
Hot
right,
mom's yoga pants.
Too. Yeah. So anyway.
Yeah, China, they're doing great. It's a huge market.
All right, let's go to the dog shit fucking.
It's a bet on international growth.
So the next two, I'm gonna let you just run with these, Bruce. You can almost kind of lump them together. They're pretty,
Yeah. So Rubric, I think Gordon and me were both buys on this, and it's done relatively okay. It's still lagging the Nasdaq performance, but it's up 8% since we went on the podcast about it. I think it continues to be an interesting story to keep your eye on. I think there are very few ways to play high growth in enterprise software kind of writ large, and I would say this is maybe one of the more interesting ones. I think the drag on Rubrik continues to be the storage part of the equation. And if they can put that behind them and become a cybersecurity company, or at least have a narrative around cybersecurity, I think the multiple has a chance to trade up very significantly. If you look at high growth kind of cybersecurity broadly, we just talked about Cloudflare. We'll talk about CrowdStrike in a second. Those companies trade at 15 times. I mean, it's basically double what Rubrik is trading at today, and they're growing faster, right, than they are on a smaller revenue base, but they're still growing faster. So I think there's upside opportunity, but they have to get past sort of the kind of the storage drag, which I think most investors tend to hate with a passion. So I'm still a buy here. I think there's a shot that they jump past the Nasdaq here, especially as rates come down. And so I'm a little bit disappointed that they've underperformed to date, but I think the near term future here is on the risk reward side is pretty compelling.
Yeah, I'm gonna go with the sell.
So I was the bear here, and my knock on it was the cost of customer acquisition, right? And this company's burning a ton of cash. So I have to admit I'm a little out of date here on the latest quarter, where it seems like they came back because they were underperforming pretty bad for a while, and then kind of come October, this last quarter, is where they popped up. And so to me, that's always been the key is are they getting more efficient at landing customers? And it seemed like they did great selling into their existing storage base, but to attract new customers outside of that, they were just spending a ton of money. And so if that engine gets more efficient, this thing is definitely underpriced, and I would jump into it. But I will admit I don't have complete information here to make a call on it, but that would be the key for me to look at.
Yeah, I just don't love it. I mean, I feel like I burned by these things so many times, Pure Storage, look cheap, and eventually NTNX too, and they eventually broke out, but it's just it doesn't encourage me that kind of really hasn't done much. It feels like it's trading like a storage name. They try to be a security name, and here Bruce is not even talking about security. So the market has spoken. It's kind of okay, this is a storage name, and the thing is, right, they're going to get more efficient, but they're also going to decelerate. So it's kind of a race, right? I feel like in the past, I've seen this story take 3 years for it to really break out and to go to its multiple and then kind of get a re-rating. So I'm going to say, tepid sell. I'm just going to be really half-assed on all these ratings, but these things are all right. Next one, that's a good segue into Nutanix, which we were just talking about. That's another one of your names, I think, Bruce.
Yeah, so Nutanix has, kind of surged after they reported their last earnings, which I think on the fiscal calendar was actually their fourth quarter. ARR is growing at a healthy, 20+%, and the company is forecasting the next fiscal year, I think, to be in kind of the mid-teens. I think that they continue to be one of the best ways to play kind of the anti-hawk Avago Broadcom market, which is to say that VMware is going to give them all this opportunity.
Did you say Avago on purpose?
Yeah.
It's a new pronunciation.
Whenever I see their ticker, I always think
it's Avago was the old
Yeah.
Yeah, it's a Vago, non-semis
Yeah.
guy.
I
Is it
always think of it
Canary?
as I always just get confused as to why they don't just change the ticker. Anyway, I know why they started it that way, but nonetheless, like I think they will continue to be a beneficiary of the VMware kind of tailwind here. I think it's like very specific to this market. I don't think there's very many ways to play it, and I think a lot of large enterprise customers are going to go running to Nutanix in like numbers and in volume and in velocity that they've never seen before. So I think these numbers, like the 14% growth in the next year, are sort of sandbag. Like I would expect them to outperform that. So I'm still a buy here. I think it's like a unique time period for the company. They're a $15 billion company. I think I could see them getting much, much, much bigger in the near term. So I continue to be a buy.
Yeah, I'll jump on that. I will continue the buy as well. I think Lena Khan is missing out and doing her job on this one, and Nutanix is benefiting from that. So I would continue to buy here. In fact, I think I'm thinking about it for my my real portfolio. So.
Whoa! Hello.
All right, I'm gonna flip over to buy. You guys convince me.
Throwing
Convince
down.
me. We're gonna be all aligned on this one now. It's gonna be a buy all the way around now. So I think
Woo!
it's gonna be, I'm convinced.
Can't go wrong. Can't go wrong. Three
I'm
bulls.
gonna be in low. I'm gonna
In
be
a China
fucking low
shop.
and chase this flag away. Yeah. All right. So now we're all the way to June 28th. Shopify, which was the George name.
Shopify. So this one has kicked some butt. Much to Bruce's. So they had strong. They had a strong quarter in Q2. So they reported in August, and that's really where you saw the stock jump. It was trending down. They had given kind of a weaker guide before that, and then they really saw an acceleration in the business, and particularly on the subscription side, which is really where you love to see it. So the company was up 21%, while OPEX was going down, so you got the best of both worlds there from them. They increased their op margin overall by 600 basis points, or 6%, and they guided revenue to accelerate into the mid-20s. So really like a stellar report. The stock really responded. It's up 21% since we talked about it 4 months ago. Oh, Bruce is sad. he's very sad. All right, Nasdaq only up 4%, so it's outperformed by 17% in that short time period. It has a full valuation. I won't pretend it doesn't. So it's 10.4 times revs or 62 times EV to EBITDA. These guys are definitely not.
62 times is the full value?
Are you trying to be sarcastic? This is not a company that's going for profitability necessarily, even though they are driving some more profitability. But what I will say is like that 10.4 times revs, as we talked about on the podcast, like a lot of that revenue is low margin revenue. It's not the highest revenue, big gross margin business. And so, you expect those businesses to trade at lower EV to revs just because the revenue is not as valuable. And so a lot of that is kind of pass through revs. Yeah. So I think the premium is actually pretty high here. This is a big name in my own portfolio. I've owned it for a long time. I think I'm actually going to trim a little on this move, and I just feel it feels risky to me. Like I like the last quarter. It's one data point, and as like they cater to small businesses in the end, and I just don't know how strong footing they are on. So I'm going to move to more of a neutral stance here, and I'm going to take a little bit of my own chips off the table.
My view is like I'm still a sell on the company. Like I know they've outperformed here in the short term. I don't like maybe I just don't am not as familiar with the space, but I don't get the macro kind of story here. Like I think for companies like Nutanix, obviously there's a macro story around VMware. For SMCI, there's a macro story around AI. I think for Cloudflare, there's a macro story around tailwinds for cybersecurity, given what AI is doing to sophistication, number of adversaries, velocity of attack. Here, I just don't see the macro story. If anything, like I think companies like, Temu and Amazon are getting more aggressive in this space. And so I just don't know enough maybe to understand if there's a big upside case here outside of them sort of financially engineering, better EBITDA or better earnings. And so those types of companies,
Bruce,
I don't have as much visibility into their, if they're able to do that on an effective basis and if they're able to hit analyst, estimates. And so the macro doesn't do it for me. So I'm still a sell.
I just wait till we start selling just the tips merch, and you will be a huge Shopify bull because we'll be using this platform.
We're gonna do that on Amazon.
I can only imagine the kind of merch that we can come up with.
We're gonna do that on TikTok Shop, which is the way to go here.
Support Chinese businesses.
Just in China with we'll sell them with a free pair of Lululemons.
There you go.
I'm just gonna be I'm gonna be a sell too on just valuation. I think you're just the valuation's high because there's just nobody else has their brand. They're the leader in this space, and there's some scale advantages and the trust business, and kind of like buy Shopify. That your shop's gonna work, right? It's kind of a no-brainer. They're competitive, but that said, it's just freaking expensive. So at 10 times with a bunch of pass-through revenue, fuck that. There's better things to buy. Moving on semi, no longer giving me a semi. Okay, so performance-wise, they performed by 10%. I think at the end of the day, so there's TXN the other analog semi, they haven't reported their quarter. We did this in August, so there's some softness in industrials and EVs still. I want to own it though. I'm gonna go with the buy on it still, mainly because both Trumpolini and Kambala both are, I think they're both on the EV train, and so it's kind of inevitable that this market's going to recover. And despite We Robot things, they're broad play on EV, right? So they're not tied to just Tesla, even though it's a big exposure. But I just kind of want to like the uncertainty unlock and all the incentives that Trump or Kamala might continue to drop from the sky on EVs. And just kind of a broader recovery from the uncertainty of the election, but. Yeah, I'm not super excited about caution around analog semis going into it, but people have cut numbers. It's up 7% versus August 24th, and the Nasdaq's up 4%, so it's 10% on performance. And again, it reflects continued weakness in the end markets. But I'm gonna stick to my guns, and actually, you know what? I'm not sticking to my guns. I'm gonna flip. I'm gonna be a flip flopper because I was actually a sell, even though I was pitching it as a buy. Apparently, I'm believing what you have on here, George. So. What do you guys?
I feel like I might have flipped that. Do you guys? Let me double check that as we talk. Why don't you go, Bruce?
Let's just say, I'm not even just not acknowledging what I had before. I could have sworn I was buy rated on just there's been too many cuts. So I think this is wrong. In fact, that would mean that I beat you guys even more because I had a buy. So that would mean that. Oh wait, no, never mind. See, no, I wouldn't have. This would have hurt me. I get underperformance. It would have hurt me if I had a buy. We need to double check that and redo the scoreboard. But long story short, I'm going to say buy, partially just on unlocking uncertainty, and things have been bad for so long and things have got to get better. Anybody have any thoughts on this one?
I don't have a ton more context on it, to be honest. I think there's probably just on balance better ways to access the market. I don't know enough to be dangerous here, so I would actually, if I'm a buy on this, I would flip to a sell, just because I think as the market unlocks a little bit here, people will take their capital.
Would you buy
Avago
instead? What about Avago? You like that one?
I actually do own that in my portfolio.
Some avocado.
I think Hawk Tan is. I think he's the man, dude.
He's brilliant.
I actually do. I'm a conviction buy on that.
Would you Hawk Tua on Hawk Tan? I would.
All right. I did screw this one up. I probably copied it over and didn't update it. So originally I was a buy, Gordon was a buy, and Bruce was a sell. So that throws off a little bit of our math.
Wait,
I'll stay long.
The actual...
Yeah.
Wait, yeah. What's up with this? We need to read the scoreboard in real time.
No, nope, you lost. It's all good.
Hey, it's not about keeping score
we'll
here.
do the mail-in ballots after. All right, we'll do the mail-in ballots, and then yeah, it'll be fine.
I was shocked that I was shocked that I was second. That didn't make any sense. That didn't. I mean, I'm like.
Well,
come on, you've been a loser all your life. What's any different?
The only one I should have got wrong is Shopify, and that was for all the right reasons.
All right. Anyways, I'm going to stick to my guns on buying EVs. EVs are going to take off. I just don't know when.
Okay.
Here's the one where you really.
And this one, I'm definitely sticking to my guns on.
Very sexy name that we should never talk about again. All right. CrowdStrike. I was a buy. CrowdStrike. I was a buy. Gordon was a weak buy, which I guess counts as a buy. And George was a sell, who got absolutely dismantled here.
It's been a month and a half. That's not enough time.
I think honestly,
on this one.
I think we came out with this podcast after they had kind of the large scale outage, which I think was a really big buying opportunity for everyone. I didn't do it myself, but if I was asked to whether I should buy or sell, and I was here. My view is that CrowdStrike is so deeply integrated into a lot of these large enterprises, and they have such a global footprint that it's impossible to rip this company out. And given the fact that they've been around for over a decade at this point, and a lot of companies trust them, having one incident like this, if you're any company other than Delta, you're usually going to give them the benefit of the doubt. And so I just think this is a monster in cybersecurity. It's a way to play the space without knowing anything about the space. They're going to continue to be a leader here. I mean, it's going to be $100 billion company at some point. It's the next generation of what Palo Alto Networks was, maybe 10 or 15 years ago, and they continue to outperform. So I continue to be a buy on this name. I think it's a great company that's well run and has executed tremendously over the last decade.
Well, to be fair, they haven't reported.
My whole piece,
all this trading, right? Nothing's happened, right? So you're taking kind of an early. I would just be careful with your hubris here, because nothing's actually happened. And the whole thesis here for poor Georgie was that you would see business, funnel getting hit, and so there's no way that could have happened without an earnings report. So good job stroking yourself on the trade. The trade has worked, and so at the end of the day, you've made people money. And it's really roared, right? So good trading call, but fundamentally,
you haven't crushed it. In a month and a half, it's up 20%. There's very few other very few other equities that you could have bought into that would have outperformed CrowdStrike.
If you're gonna get it right, you at least got to get it right on the fundamentals. I would think you'd have to go through at least one quarter. You're gonna really be able to get paid just trading stocks intra-quarter. This is not. I just don't feel like you.
I think he's not exiting here, so let's.
Yeah, you're not exiting.
I think this is truly an event-driven trade, because we basically had the podcast the week after, 2 weeks after this incident happened. So this was a true event-driven opportunity in my mind.
Yeah, you are a genius.
So
the bird is with my kind of
all hail Bruce.
We got to recalculate the scoreboard.
Yeah, we will do that.
I'm going to stay short. Yeah, we'll just put Bruce's picture now. We'll move that to the center. So for the next for going forward.
Let's go.
So I was going to say I'm going to stay a sell here, kind of on my same thesis that longer term this will cause some disruption. I think if you look 5 years down the road, this will be a blip and no one will remember it. But I do think some near-term turbulence is coming. In fact, I was talking to a company that is close to these guys. They don't do exactly what they do. They don't compete with them. They're actually complementary to them. And they were mentioning how they landed a big financial, and this financial is actually churning from CrowdStrike to SentinelOne. So I was surprised to hear that. I won't say the name, but it's sample size of one, but it was a very large customer, and that actually surprised me, because my thesis was more the coming pipeline gets disrupted, not existing customers churn, and this was an example of a large customer churning, and they weren't named Delta. So, anyways, I think there's probably some potential
anecdotal evidence.
It's a channel check, baby. Channel check. Just check. Check. Data point. Yeah, you can make 50 calls on that.
So
Side for sure. So
we will see. It's a full evaluation for that already assumes that there's not going to be any turbulence. So I think there could be some short-term weakness, in which case I would look to exit on that. So I would actually short here.
Ooh, I love the controversy.
So I'm going to a short position on this one. Wow. Not just sell. So
you're
short.
do it in your portfolio. You're going to put a short on it. Or...
I might. I'm going to think about it. I'm long Sentinel 1, so I've already got that's like my short. Okay, it's like Bruce's shorts, yeah. On Friday night in Manhattan.
What's that?
Shorts.
Anything up on the floor of some Haitian refugee's apartment or what? I don't understand. I don't know where they came from.
That's later in the evening.
We're editing that out for sure. I do not want to get hate mail from the Haitians. They're organizing. Let them beat up Trump in Vance.
Do we have any Haitian listeners?
I can't go through Springfield anymore. So, TWLO is the last one. Again, this was on October 18th. So, all of 9 days.
Yeah, we're like 10 days from the episode. We're 9 days from the episode. So I don't think there's much to say here. Like it's down one. I think I actually don't even have the right ticker on this.
I'm still up.
Trading call, it's event driven.
I think they report. Is it this week that they report? They either report this week or next. So that'll be the interesting.
Gordon has hitched his wagon to my star, and I'm still up, and I've dragged Gordon along with me. The only one in the red here is George.
That's right.
We're gonna live or die by the super micro call regardless, Bruce, and we're hitched there. So let's see.
Well, we got another 10 coming up, right? So maybe we'll get canceled by Buzzsprout or whatever the hell. So anyway, so I think that we
don't lose all those sponsors.
That's right. Yeah, and so I guess that's it. I mean that's our 10. I mean, I'm not. I guess. Stay tuned for the next one. I guess we haven't decided. We're kicking around a few names, but that was fun for me. I'm proud of our first 10. We're still optimizing, these podcasts. We're trying to get some discipline and be a little briefer for you guys, so that it won't be so damn painful, and increase the number of strokes and not the depth. That's just easy, the short strokes. But
you can send your nudes or recommendations on stocks that we should cover to stockjockstips@gmail.com. Did I get that right?
That's right. And it's like at Stock Jocks Tips at YouTube and on Twitter too, if you want to find us on the internet. But why don't you guys take us out with what we always say?
Well, before we do. That's not the exit music.
I love it.
Really throwing our listeners off. I was going to say, before we leave, please like and subscribe. Give us 5 stars. If you like what we do, definitely recommend us to friends. We appreciate that. So with that, bulls make money. Bruce?
Bears make money.
Pigs get slaughtered.
We out.
Bye-bye. Stop recording this bitch.
Say make money, money, make money, money, money. Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town. Remy gave me the sound. Fat pockets. I need that Skrilla on the Rilla. Fat pockets. I need that Skrilla on the Rilla.